And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, November 9th, 2022. Well, election day is past, but we have to sit and wait to really get all those votes counted and to find out what the final decision across our country will be. As I promised myself, I'm not watching any news. And I'm not reading into anything that has been printed thus far. Until all the results are in and every last vote has been counted, then of course I'm going to want to know what the outcome is. Thus far, it's keeping me very politically centered. And so I'm not really leaning to one side or the other side or calling somebody any kind of names. It's kind of a nice feeling. Anyway, here in the market, there was no reaction to, in my view, to what may be known already. And so we just continue to move along within the confines or within the context of the current Elliott wave count. And it is unfolding nicely. But I want to review both S&P and the NASDAQ here on the hourly chart, just really talking about this minor second wave and what's kind of gone on thus far and what may be happening. So as I left off yesterday, I had counted and I put it the minor wave 2 up here at yesterday's highs. And here in the S&P, that's 3867. And then it took a little nosedive right off of that on the news regarding what was taking place in Bitcoin and this very young billionaire who I guess at one point was worth $12 billion and basically has lost 11 of the 12 billion and was supposedly going to be bailed out, I think by Binance, which is a Chinese company. I believe, I could be wrong, but that's what I thought I was reading. And then some news came out late this afternoon that no, they're kind of backing off saying they're not going to do the deal. I'm like, well, I'm not sure who was selling yesterday then to liquidate that position that this guy had, but suddenly saying that the deal's off the table, Bitcoin's now dropped an additional 3,000 and is now trading at 15,000, as you can see right there. So is that going to send our markets into a little bit more of a tailspin as it did yesterday? And they're already sitting down at the low, so I'm not sure how much lower they're going to go. They got 15 minutes before we close. And then reopen in an hour for the Globex session. Now, let's just take a look where we are. Whereas I left it off yesterday, putting that minor wave 2 there, that would suggest that we are now going to be dropping in a minor third wave, minor 3 of intermediate wave 3. And how it was left yesterday, we had a quick drop, we had a quick recovery. And I was going to put that on a sub or on a minute level, minute 1, minute 2. So we're 1, 2, 1, 2, 1, 2. And that would suggest that once the second wave was complete, which may have been right there, or it was right there, so I'm not really sure, but I'm going to say right here, then that set the stage for the beginning of a minute wave 3, of minor wave 3, of intermediate wave 3. Now, what does that tell us? That it should just go. And that was what I said. We should just go. Well, it did, but not at the speed or the intensity that I thought it would, except right there is when it kicked. It kicked in a little bit here, and then, but every time, every single time, and then it kicked in again here, but every time they fought it. And then I was looking to see why. Because there was one stick in the mud, is what I would call it, within the NASDAQ and within within the Titan category within the NASDAQ, and that was Metaverse. Metaverse did finally announce that they are going to lay off 11,000 employees. Again, I didn't read any details as to where the majority of those employees reside. If it's here in the United States, is it here in California? Is it evenly split between this team and that team and the different types, the different areas within Metaverse? I do not know any of that. All I read was that 11,000 employees would lose their jobs. and Mark Zuckerberg apologized. So in any case, metaverse stockholders or investors decided that that was the best news since sliced bread, and they took that as an opportunity to lift prices off of their recent lows below 100. In fact, the opening bid this morning, I mean, the market was marked that it was a 100 bid at, and wherever that was. And so that put it up about I think it was just over $5, maybe $6. And which is, I thought, pretty incredible. And then, of course, I said, well, they're going to be saving money, et cetera, et cetera. And I'm like, wow, that's still a silly reason to buy, because actually we don't know how much money they're going to be saving, because we don't know how much money Mr. Zuckerberg and his teams have put into metaverse without any return yet, and how much more is committed. So in actuality, all that Facebook/metaverse has done is laid off 11,000 people who will likely go, and I don't know if they'll get severance packages, et cetera, et cetera. But this quick turnaround, like their earnings are going to be not as bad next time because he laid off these people, he doesn't have to pay them, is a knee-jerk reaction and likely won't last. Because metaverse, like the rest of us, still has to go through the recession, still has to go through more tightening, still has to go through everything that we do, but they're going to do it on a corporate level while we do it on a retail level. So a little bit rushing in, and as I felt that what it turned out to be was a gamma squeeze coming into this Friday's expiration for November. And it's a weekly expiration. And that actually was wrapped around, I believe, somebody was fairly short those 100 calls that expired this Friday. And again, the gamma squeeze comes in that if you sell enough of those calls and you're doing delta neutral, and they were not in the money, so they're out of the money, so they weren't carrying a full 100 deltas. And so there are a lot of traders that they go, we are delta neutral in our trades. So they sell 10 of those calls, but maybe they only had a 50 delta. So instead of having to buy 1,000 shares, you only bought 500 shares. Then the stock starts to move, and it gets bid at 100, and it moves up from there. And you get squeezed because you're now getting shorter and shorter, even though you do have long stock, but not enough to cover the entire position. So that's what I mean by the gamma squeeze. And they can be very, very powerful, by the way. We saw it last week in the 140 put in Apple, where there was a large seller of the 140 put, and for the most part, the stock held above until Friday expiration, where it went from, I think it was 141 or 142 down to 134 and change. Came roaring back to like 138, but still, what a squeeze. Because again, unless they're 100% delta neutral, up and down. So in other words, it's like if you sold one, that equals 100 shares of stock. You bought or sold that 100 shares of stock. If you didn't, then you're going to get caught as the stock moves. And Apple, along with many other stocks, has been extremely volatile. So all that in mind, this particular nosedive, and it was good. It was, for the most part, tradable, but because of metaverse, every time this thing slid, it would be bing, 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 back about $5 or $6 off of wherever it stopped as they moved back in to scoop up what they needed in metaverse. So it wasn't the best trading. And in fact, this is the hourly chart. And you can just see on the hourly chart, red, green, red, green, red, red, green, red, red, green, green, red, and that's just like nothing, and tight ranges. So for quite often, this is overnight, but even here when we got here, yep, that was against the first round that came in to give old Bitcoin a good whack. And then this was the second time they've come in to give it a whack. These were not bad moves. These were good moves. And I made some money on these moves, but they weren't as easy just to kind of get in because they'd start, jump, and then boom. Enough sellers via coming in and selling larger baskets was more broad-based. So we did get some moves. However, I want to present something today because tomorrow morning we have CPI. And if you listen to the chatter in the chat rooms, in and around the market, people are going to begin to think, well, I think we might like those CPI numbers when they come out. And I'm like, really? They're reported to the consensus is that we should have 0.3 of a point. So there should be, right now that they're at 0.4, right? 0.4. And we're looking for 0.7. That's the consensus. So that's a rise in the CPI numbers. They break it down for X food and energy month over month and year over year. So year over year, they're looking at that we should get an increase in the consumer price index. Not a surprise. To me, it's not a surprise. It's going to be the amount. And then it's going to, once they report to us what the core inflation rate on a consumer level, where that is, and that's where I think we're going to see the big increase. X food and energy, okay, give me the core. Give me the core. Because that's the fool. When we get to see that, and it's much more than what has been expected, we get a gigantic move down. Because the pressure that's going to turn and get put on the Fed to if they're thinking they're going to lighten up a little bit and maybe only do 50 basis points in December, yeah, that might go by the wayside. So a lot is playing on that. But if they really do, and it comes out and it's a little bit favorable to the markets, well, here's how I would look at this. I may have to back this up and say this is ABC A. These are all minutes. This subminutes actually, and this would be minute A of minor 2. This could be minute B of minor 2. And then we're going to get a minute C wave. And we're going to end up back above here. Now, let's just, for the exercise, here we have just retracements coming off. Thus far, we've retraced back down 70.5% of the rally. That's considered the sweet spot. I've heard it called that, so I just kind of stick in there, which is an old market maker Fibonacci level from the SPX pit, the old SPX pit from years and years ago. It still is of value, so I still include it. Many times the market will trade and drop there, particularly in a futures market. Here we are in the S&P future, aka SPX. So I thought, okay, dropped right there, holding it right now. We'll see what happens once the markets reopen in about an hour. Now, again, as it did, got this, the 4, the 8, the 20, and the 50. The 50 is already below, but now you can see the 50 EMA turning lower. The 20 is going very strongly lower, as are the 4 and the 8 all through this. So there was a great deal of selling coming in right in there. If that continues, then I'm not going to do A, B, and then a C wave, although a B wave can come all the way down to 37.05 and then reverse and go all the way back to 38.67. This may happen for whatever reason, to be honest with you. If we still have enough players out there who are looking for a rally and they start to buy, or there's some type of news, or if CPI gets a warm reception from the market and people can really draw from it and then build some trades around it, yeah, we could have a sincerely decent rally, still within the context of a minor wave 2. So let me just take the Fibonacci retracements for that B wave. If I underline each one of those, it is what it is. Now let's take a look, and we do that via the extensions on what a C wave would look like. So we go up to here, up to there, down to there. That's saying that, excuse me, they're saying that this is the low. Well, 618, which is pretty common, right? So if it's A, B, C, 618 would be a failure because it would fail to take out that high. We're usually looking and expecting it to take out that high. So what do we have? This high is 38.67. It might get to 70.5 again. That sweet spot, that's at 38.65. Very small failure. So if it got there and didn't like it anymore and started to nosedive, I would consider it complete. Again, I'm looking for 5 waves. C waves, always 5 waves. Above that, we have 38.78, and then we have 39.12. Now, I can take it back out. It does not violate that high, right? 39.28 comes close, but remember, a wave 2 can retrace most of wave 1. Just cannot exceed it. It cannot exceed the starting point of that minor wave 1, but it can equal it and still be within the rules. So there it is. There's the possibility. Is it real? I don't know yet. But I'm telling you, I'm going to leave it there and I'm going to talk about it, because the last thing I want is to continue to say, well, this is looking pretty good and it looks like we should just continue to go down. And I'm just looking, that number should not be any good and we should just slide down to 3,600. Well, I don't know what the number is going to be. And I like to look and play with 2 views. One that's going to cover me if they just do something really silly and go, nope, and take it up. And maybe they wouldn't even need the CPI number to take it up. Maybe the CPI number will come out kind of crappy. They bring it back down here and then take it up. And that could be everything to do with expiration, which comes on Friday, with Metaverse continuing to go higher, with maybe Apple deciding to join the party, maybe Google deciding to join the party, et cetera, et cetera. We don't know. I don't have the ability to read the minds of all the traders that are sitting around planning and plotting what they're going to be doing tomorrow. So if the CPI number comes out and it is fairly acceptable or even liked, or if it comes in below consensus by showing improvement, right? More people are, actually, for whatever reason. And then don't forget, right, also included with the CPI, we have the jobless claims. If more people are going to be filing, which that would be the part that we kind of be looking for, is that more people are now filing their unemployment benefits because they're from Twitter. But now they're coming in from Apple, Metaverse. I'm not sure when Apple, Amazon's just got a hiring freeze. So what that's going to do, I've not really heard. I know there's some others out there that are planning to lay off. So who knows? But remember, the Fed, as I said, it's a lot easier to look for a bottom if unemployment is 8% and inflation is 3%. Then we can look for a bottom. Then we could look, because then with the expectation that the Fed will just raise that target from 2% to 3%, just to get us back on gear and starting to rebuild on the next bull market. That's also a very strong possibility, and that can come next year, right? Early next year, for all we know. So again, we got a lot of stuff out there, but I don't see any of it right this second. I really don't believe that we have really gone through the bulk of what the markets, the companies have really need to go through. Next week, we have NVIDIA reporting. That huge rally that they did up to 145, got totally swallowed today, just down 8. It's just like, okay, crush everything that you had to have yesterday and run it up. So again, here we sit. Possibility. They like that CPI number and it'll rally. Again, and in front of that CPI number, I cannot say, oops, that's not what I wanted. I wanted to get rid of it. Remove it. Extensions and those two. That we can't just continue to drop. Asian markets, once we reopen in an hour, and then the European markets. If we break below 3705, this stays wave 2. If we get down in here and hold, say around this area, play around up, and we're still hanging around there tomorrow morning, the same deal. That upside move could materialize. We're waiting on the economic data. That's going to tell us a lot, at least for trading tomorrow, and more than likely for the expiration on Friday. One will just roll into the other. So we have support, right? Basically where we were. Breaking below there drops that support down to here, and there was a whole bunch of spots that they stopped. So we can consider 37.15 down to 37.11. So basically 37.10 to 15 is the support area. And then of course we have 05. So 05, actually 425, up to 15, that's all going to be support. Once it gets broken, and it gets broken by one big foul swoop, don't get in the way. Don't be buying it. Join the party. So we would, because that would be a signal, a strong enough signal, that suddenly whoosh would be a strong enough signal that that minor third, first the minute 3, then the minor 3, and the intermediate 3 are all joining forces to push and get these markets much, much lower. So moving over to the NASDAQ, basically same story. Let's make our lives easy. Right now, I had put on for an internal drop. And not to go too much further, because this is really just these retracements from there to there. And I'm pretty sure the retracement. Yep. Because I wanted to see if there was more downside and this was actually just going to be a little bit of a B wave. Look where it came to, same as in the S&P. Comes down to that sweet spot, 70.5% retracement of the rally off of the 10,006, 635, 636 low up to yesterday's high at 11. Let me go right over to here, 11,231. These are beautiful rallies, by the way. I mean, they're just incredible how they just zip it up there. And now we're over halfway back down to it. It's the volatility is there. And I heard a couple people making some comments on volatility, and they did it in my comment section. And it is bizarre. It is just very bizarre. But don't forget that, and I'm sorry because I meant to look it up and bring it into our conversation here, that there are a lot of derivative indexes and other products related to the VIX. There's the VIX the VIX for the NASDAQ, there's the VIX for the Russell, there's the VIX for the broader New York market, there's the UVXY, et cetera, and each one has options, they have derivatives. And there was some activity going between the months and the back months and et cetera. So to me, it sounded all very convoluted because I don't quite understand how that all gets put together. But there are people out there that do, and they've got algorithms that do it for them. So we just got to live through it. But hands down, whether that number is registering it or not, I mean, it was only up 9 cents. If it's registering or not, a 646 drop in the Dow. And granted, the VIX is based on the SPX options. So even if we're just looking at the ES, it was down 79. That's a pretty big move for the S&P. It really is. Only to be up 9 cents. It's like, okay, give me a break. But I think it might have been up more, but that's all it registered. So interesting. So I'm not necessarily looking at that VIX going like, well, it should be above 30 from the way we're trading, but it's not dropping too much below 25. So again, I'm letting the VIX be the VIX. Volatility in the option is being translated into premium. And trust me, there's a plenty of premium for those. Back here to the NASDAQ, to this very disjointed and rather ugly pattern that this thing is drawn out. But I can't walk away saying, oh yeah, started that third and what a beautiful drop, because I was trading this today and it was big with metaverse suddenly going like, we got to buy it, and they pop it and then it would dive and they pop it. And in between these moves, let me just drop down to the 5-minute chart and open that up. Look at you can see it. Looked much nicer on the hourly chart, and that was the only one that really got there, where they just kind of continued on a 5-minute basis where, wow, you got a good trade. But you know what? Everybody was at lunch or at work, or they were away from their desk, which probably helped it go down. But then they buy it. And then even in here, down, buy it, down, buy it, down, buy it, down, all the way. So could this have been, we had 10,811, got very close. So it's still there. Below that level, 10,636, which is the low. In wave 3, I'm looking for that low to get annihilated and kicked to the curb and for the market to continue to drop. From here, it's 200 points. So CPI, can it knock it down 200 points? Oh, yes. Last time for CPI, when it came out, the market nosedived. I mean, nosedived. Now, be forewarned. If it's the same pattern that we've now seen for 2 or 3 months, the first response, once that number hits, the first response is somebody hits the buy button and throws this thing way up high. I'm telling you, just throws this thing up high. And then the next one is down 50, down another 50. And last time it was incredible to trade because it was a freight train heading south. Just absolutely with purpose. Get out. And if they do it again, I think we could end up down. I think we got one low left that we can break. It's around 10,004 something. I think we break that and start heading in. Get this third wave done, and then the minor, and then the minor 4 and 5, and get that intermediate third wave done, and then an intermediate 4 and an intermediate 5. Get that primary C wave done. Then we've got a lot to talk about. Then we're going to be talking about, you're going to want to buy some options. You're going to want to buy some different things. You're going to want to put because I will be expecting a cycle degree B wave. And it should be magnificent. And to tell you the truth, the way I think it might unfold is that there should be some type of a credit event wrapped around it, but it will be a burst. It will be similar to the low that we reached in March of 2020, when the government decided and announced that they were stepping in and they were going to have to start to provide some financial support. And bam. And trust me, in the NASDAQ, we went from 6,700 to 16,000 in a year. That was a massive rally. That was the rally to behold. And it was nonstop, and it did nothing. It kicked everyone's butt. Okay, so I'm not saying it's going to be that intensity, because that was impulse, and this is going to be corrective. So there are differences, but I'm expecting a pretty strong rally, and I'm looking for that like V bottom to give us confirmation that, okay, cycle wave A, you're done. Cycle wave B, you're underway. For tomorrow, though, as I talk and get myself ahead of the game, I'm going to be looking for 10,811 to hold. Can't tell you, because we've got two time zones. We've got the Asian markets and the European markets, plus our own little opening for Globex. So I don't know. I don't know if it's really going to hold. So, they're already starting to mark some things down. So who knows? But if it breaks all this, you're going to be looking for it to come down at least and test this. If they break this now, then I'm going to be more in tune to that it's wave 3. And I truly wouldn't be looking for something to turn the whole market around as strong as we've seen in the past with these numbers. I wouldn't be looking for it if they're going to take it down closer to here by the time we get back in tomorrow morning. So, a lot going on, a lot to kind of work ourselves around. And again, tomorrow morning, pre-open, 8:30 Eastern, 5:30 Pacific, we have CPI and Jobless Claims, both marked red. And I'm pretty certain that we are going to get a reaction one way or the other. These are both market movers. We've been here, we've done them before. Be prepared, be confident, because the moves themselves can be incredible profit centers. I will say that. So let's all have a great day tomorrow. Let's have a great trading day. Options expiration, metaverse. We got a lot of stocks. If they're going to pound Apple again, what are they going to do? Bring it down to 130? Very possible. Or are they going to run it back up to 145? Also possible. It depends on how that number comes out. That's the truth. How that CPI and those jobless claims come out and how the market wants to receive it is going to determine whether Apple makes a skidding stop, turns, and starts heading back to 140. Where Meta skid stop and heads to 105 to 110. All right, just check them out. Microsoft is going to go to 230, 235, or even higher. Google's going to try to get back to 90, 95. It might. Amazon back to 90, 95, maybe. Again, AMD, they crushed. AMD, they probably really would prefer to have it between 61 and 62 for expiration. So the further they drop, the more adjustments they got to go. So remember that. When we get these big move days on an expiration, there's a lot of adjustments being made. And then if they take it all back, adjustments are made again. Massive amounts of stock trade when all of that takes place. So I'm expecting for that too. The volumes will be pretty heavy duty. And when they come in to sell with that kind of heavy duty, it moves these indexes. So be prepared, stay open, keep your mindset together. That's going to be very, very important to us as individual traders. Try not to listen or pay attention to the noise, pay attention to the price action, pay attention to the moving averages, pay attention to the fibs that you now all hopefully know how to draw. The Elliott, understanding that if it does drop in a third, it's gonna get pretty wild. It will get very wild very quickly. All right, I am going to end there. I always talk too much and I apologize, but I'm sure glad you all hang out and stick with me right to the end. Our next update will be on Sunday, the 13th. No, I take that back. I'm one day ahead. Can you see I want my weekend? No, the next update will be Thursday, the 10th. My apologies.